Here is the current stock market update for SOFI Technologies Incorporated, stock ticker SOFI. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments section below so that other traders can find this information more easily on the platform. So what we're looking at here is the 4-hour time frame. I thought that it would probably be a better idea to take a bit of a step back here and try to look at this most recent trend activity to try to assess what might be most likely to occur next. Now that we have started to see share prices roll over at these upper levels, this does give us a more of a clear trend wave to be analyzing here. And this near-term price low is currently coming in at $9.63. So currently, what we're looking at here is a bit of a short-term trading range that has developed between 960 and 1050 roughly, which is interesting because this 1050 area is really a price level that we've been watching for quite some time. This is a price zone that has been pointed out in these videos since ever since we were trading at roughly at 750. This is a price zone we've been watching for quite a while now. So the fact that we did manage to find resistance there is quite interesting, and it does show that these technical analysis techniques have a significant amount of value. Some people like to disregard chart analysis, but that's completely ridiculous because it's a very important piece of information. It's extra information that the market gives us, and what this really allows us to do is to identify the best possible, entry points, exit points. It allows us to scale into positions, add to positions, at better levels and things like that. So, these chart analysis techniques can be incredibly useful in terms of, maximizing returns over time. So some people like to sort of dismiss chart analysis and say that it doesn't work or something like that. It's complete nonsense. There's hundreds of years of back testing that goes into a lot of these techniques. And I will absolutely put my returns against anybody else that dismisses technical analysis. Let's see whose portfolio is actually performing better over the long term. I will put my portfolio against anybody's portfolio. So what we're looking at here, currently is this support zone, which comes in at $9.63. We haven't yet tested that prior support zone that I've been watching here, which comes in right around $9.40. The reason that I'm pointing this level out specifically is because this is the 38.2% Fibonacci retracement zone of this recent ascending move higher. And then it's also sort of the top of a price gap that had formed previously. So during this run higher, we did see a little bit of a price gap at one of the market opens. And if we do sort of fall below there, that would be a greater evidence that weakness is likely to occur because this was a relatively short time ago. And this would really suggest that, this price gap could ultimately be filled to the downside. So that is something that could generate negative momentum going forward if we do fall back into this area. There are a couple of reasons to believe that might not happen. We can point to the Fibonacci support zone as one. We've got a little bit of a historical support zone as two. And then we also have this 20-period exponential moving average, this yellow line here, that is quickly moving into this area. So, if you pair all these things together, combine all these things together, you do see what could develop as a better support level and a possible bounce coming in around the $9.40 area. So, as I said, a break below there would be a bit more of a problem for people that are long the stock because I think at the very least that probably sends you right back into roughly 870. This is a bit of a congestion zone previously, a bit of a consolidation area that was seen previously. You also have the 61.8% Fibonacci retracement of this price move coming into contact with this area. And then you have the this orange line here, which is the 50-period exponential moving average that's starting to rise into this region as well. So this would be really the next level that I would be watching to the downside, coming in at roughly $8.70. So, overall, with this price movement, we're trading right back around flat territory here for the year. With this price movement, we're looking at year-to-date gains in SOFI of 2.34%, which would mean that the S&P is currently trading with results that are 10 times better, more than 10 times better. So, the level of optimism that has been seen during this run higher is quite misplaced in my opinion. I think it's pretty ridiculous and short-sighted. I think it does. I think it misses the broader picture. But if we are going to pull out a bit longer term here and try to see, now that we've developed some support areas, some possible support zones here, we should look at the possible upside as well. And as we can see, this recent move higher has broken through some important levels of resistance. Specifically, what I've been looking at is $9.20. I think that was a fairly significant support break to the top side. And then, the fact that we did see a price failure here at 1049 is quite interesting. If share prices do start to continue to move lower, that's going to form a very important technical price pattern on this chart, which would be a double top pattern. Those are very powerful patterns that are difficult to break. It doesn't mean that you can't break them, but it would start to generate a very formidable sort of intimidating price zone here going forward if we do start to see support levels break. So I wouldn't say that we're exactly there just yet. I wouldn't say that we're quite there. I mean, we have seen a break below the 23.6% Fibonacci support zone of this price move here, but that wasn't a very strong area in my opinion, because there really was just that fib level and nothing else. I mean, we didn't have a region of moving average support. We didn't really have any historical support coming into that and coming into contact with that area. So just this fib level alone isn't a very strong price level. I mean, I personally wouldn't be trading off of just a Fibonacci level by itself. So the fact that we did break through here, not totally surprising. And I wouldn't really think that it's enough of a reason to be concerned just yet. I mean, I do think that a break below 940 would be a bit more of a warning signal, because then, as I said, you do have this price gap here that would need to be filled. And then that is the type of event that could generate enough bearish momentum to then force a retest or a downside test of this roughly $8.70 level. And then if all of that did occur, then what you are looking at that point would be a longer term double top formation that would be harder to break. And that doesn't mean that you can't break it, but it would just be more difficult to break, and it would be a more intimidating level of resistance to the top side. So here's the current stock market update for SOFI Technologies, stock ticker SOFI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.